right, Thomas, we have a great topic today. This is something that is on everyone's mind. Is the 60/40 portfolio still relevant? It's been the bedrock of long-term investing for the longest time, but it just recently posted its worst monthly slide since early in the pandemic. Normally, you'd see about an annualized return of 10%. So I want to know, Thomas, how confident are you in the 60/40 model right now?
As we were talking, I think it's kind of archaic right now in this environment due to the interest rates being relatively low, which then we're seeing the worst performance. And one of the things you got to think about as interest rates rise, the bond values typically go down in a portfolio, which can really decimate your overall performance. So I think something that is probably wise is you need to think about other asset classes.
Right.
Or something even outside of that structure to get the type of returns that you may have been used to.
Yeah, and we'll talk about some of those options in just a sec. But first, I just want to talk about this moment that we're living in, which is we are living in a moment of really high inflation. We've talked about it before, and we know that the Fed will be raising rates. Will that change how you feel about the 60/40 model?
Perhaps, I think that when you're dealing with, depending on what the client strategy is, are they trying to generate income? Are they trying to see growth? Are they trying to moderate their risk? Yes, I do see it coming back into play when we start to see the rising of interest rates. But at the same time, even with that, we've been conditioned now, right? Because we've been in this environment. I still believe that you should be looking at bond alternatives to generate that safety and also that income and growth on the conservative side through bonds.
Mm-hmm. Yeah, very good advice.
Mhm.
Now, we know you specialize in helping pre-retirees and retirees navigate all this uncertainty. So,
Mhm.
what are you recommending to clients right now who want a successful but well-diversified portfolio?
Yeah, I would say look at some different types of hedge strategies that generate income. We obviously, at my firm, we do annuities, fixed index annuities or fixed annuities as a bond alternative and as a CD alternative even.
Hmm.
Then obviously there's some structured note options that we leverage if my client is looking to generate some income or just a conservative play. As you look at that illustration, there's multiple places where you can look at putting your money in. I know real estate right now is heated. I don't buy and sell real estate, but I know it's nothing wrong with having a sliver of that in your portfolio. For real assets, obviously there's some ETFs that we leverage to give you some exposure with not having the illiquidity of owning the actual property. So look at different asset classes, as this illustration here states.
Right. I think it's interesting that maybe, the average investor probably doesn't recognize that they can get exposure to things like real estate through those ETFs that you mentioned. Because the last thing I want, Thomas, is to be a landlord. I'm going to be honest with you.
For sure, for sure. I wouldn't do any good at that either. You
We have
probably
different skills. Yeah.
yes.
Thomas, this was very helpful. If somebody would like help designing one of those really strategic portfolios, what's the best way to reach you?
Absolutely. Yes. You can obviously check out my website. It's hovering down there at the bottom, Martin Heritage Group LLC.com. You can catch me on all social media platforms. I'm at your LinkedIn, your Instagram, Facebook at Martin Heritage Group, or you can shoot me an email, info@martinheritagegroupllc.com. I would love to have a conversation with you and look at how your portfolio is positioned.
Yeah, that's great. All right, Thomas, thank you.
Thank you. Have a great afternoon.